Hello friends and welcome to this video. In this video we are going to talk about managerial accounting. In fact, we'll do a chapter on introduction to managerial accounting. So let's start with the definition of managerial accounting, also very commonly called as management accounting. In this particular video we are going to discuss about three definitions of management accounting. The first definition given by American Accounting Association, the second one given by Charles Horngren, and third definition is a simple creation of definition by combining various other definitions of management accounting. It's a simpler version, what we can say, of definition. The first definition, it reads, management accounting includes the methods and concepts necessary for effective planning, for choosing among alternative business actions, and for control through the evaluation and interpretation of performances. This is the definition given by American Accounting Association. A little wider one. It includes a lot of things. However, one thing that we need to understand is it includes the methods and the concepts which are necessary for management related activities. Okay, let's look at the second definition. Management accounting is the process of identifying, measurement, accumulation, analysis, preparation, interpretation, and communication of the information that assist executives in fulfilling organizational objectives. Now, this is a very simpler definition. If I pick up the first alphabets of all the items of the process, we can get a very simple anagram. The anagram would become I am a square pick. I am a square pick is what we will get, where I stands for identification, M as in measurement, A square accumulation analysis, pick, P as in preparation, I as in interpretation, and C communication. Of what? Of course, information. Which kind of information? That will help the executives, that is the management, in fulfilling the organizational objectives. Okay, I hope we have understood these two definitions. Guys, one very important thing you people need to remember, and that is whenever you are writing any answer, especially a long answer, on any question of management accounting or managerial accounting, try and start your answer with one of the definitions. That shows the knowledge and control that you have over the subject. That's always a best practice to use. Now let's look at a third one, which is a comparatively easier definition. In simple words, management accounting may be defined as: management accounting is accounting information in any form which is useful to managers in making an informed decision to attain organizational objectives. If you look at this, there is nothing new in the definition. It's just the simplification of the two previous definitions. But one thing that you need to remember is any accounting information in any form, it does not require any specified or a specific form, in any form which can be used by the management so that they can take an informed decision to achieve organizational objectives. That's management accounting. I hope we have all understood this. Let's have a look at the next part then. Features of management accounting. The first feature is future oriented. Whenever we normally talk about accounting, the first thing that we think is financial accounting. And we are all aware that it's basically historical in nature. But it is management accounting which is future oriented. Forecasting, planning, that's the basic job of management accounting. Okay. The next second point is greater emphasis on nature of cost. When we are preparing our normal financial accounting, we just write the cost and really do not worry about what is the nature. But what management accounting does, it breaks it up into fixed cost, variable cost, semi-variable cost, and knowing the nature of the cost always helps management in making better decisions. All right. So the third one, science and arts. Obviously, because management accounting is based on certain data, it has got to be a science. At the same time, management accounting is also an art because it is based on subjective decision making. Wherever application of a judgment comes, it becomes an art, and use of data, it becomes science. So management accounting is both a science and an art. Okay. Fourth is aid to decision making. The word aid in simple words means help. Management accounting basically forms the foundation stone for any kind of a future related decision to be made by the business. So yes, it's a big help, a big support in decision making process. Fifth is monetary and non-monetary items. Normally, whenever we talk of accounting, accounting considers only the monetary items. Accounting never considers non-monetary items. However, management accounting does consider non-monetary items if they are going to impact in any decision making process. Okay. The sixth is cause and effect relationship. See, we have been learning accounts for some time, and we all know the only reason of making accounting is to know the result, profit or loss, and know the financial position. That's it. But management accounting is not only interested in the result, it is interested also in knowing why this result. If I have got profit, why profit? If I have got loss, why loss? Okay, that does make the difference, a cause and effect relationship. Seventh is no specific rules, as we just now discussed here, in any form. That means we don't need to worry that, okay, I need a T-shaped account, I need a vertical presentation. Don't need to worry about any rules, regulations, forms or formats. As far as that can be understood by the management, that is acceptable, right? And eighth is only provides information, not decision. Obviously, we just now read here that it's an aid. It supports decision making. It does not take a decision by itself. It's only an instrument that helps management in taking decision. Okay. So let's move to the next one. Objectives. Why management accounting? What are the aims or objectives of management accounting? The first one is provides data. That's the first and the foremost objective, because forecasting and decision making depends on the correct data provided by management accounting. Okay. Second one is financial information in easy to understand form. See, not necessarily everyone who is going to use financial information is an expert in the field of finance. There may be engineers, doctors, lawyers who are at the top position and they really don't know much about finance. So what management accounting does, it provides that information in such a manner that anyone who wants to understand it can understand it in a very easier form. All right. The third one is establish relations between departments. Lot of times what happens is each department works on its own individuality, and we are not able to form a strong relationship between the employees of various departments, or in fact sometimes even between the departments. It is management accounting which actually establishes such a relation. Fourth one helps performance tracking. Basically performance tracking you can call it, or you can say it helps maintain performance, because certain targets are set, certain goals are made, and each employee is expected to follow that particular target or the goal. So that actually helps us in you can say performance tracking or whatever you call it. It can help us in doing that. All right. So now let's look at the fifth one, which says motivate employees. for each employee a certain target is set, and if they achieve it, they are given some incentives. Now that motivates every employee. First motivation, I want to achieve my target. Second motivation is getting those incentives. That really helps. Okay, now sixth one, helps to minimize tax burden. A proper tax planning is what is needed, and of course management accounting does perform a good tax planning job, which actually minimizes tax burden. And seventh one is helps maximize wealth. Very simple thing. Your profit increases, your tax burden decreases, the wealth of the organization is going to increase. All right. So I hope we have understood all the objectives of management. Let's move to the next part. Scope of management accounting. Basically, if you look at the meaning of the term scope, it means every area which has been touched upon. Now here when we talk of scope of management accounting, various areas which are touched upon by the management accounting. The first is financial accounting. Management accounting gets its data from financial accounting, and cost accounting as well. So obviously it helps. At the same time, it gives inputs to financial accounting and cost accounting for future planning. Third is tax accounting. Just now in the earlier slide, we have learned about this thing called minimized tax burden. That is where management accounting has a scope with tax accounting. Internal audit. Basically management account is mainly involved with internal audit, because internal audit is done by the management and management accounting is for the management. So there is actually a very higher scope of relationship between management accounting and internal audit. Budgetary control, it's the job of the management accounting to prepare proper budgets and make sure that everything as planned is done. All right. Forecasting. In fact, in earlier few slides, we have discussed about forecasting a lot, because forecasting leads to decision making. Okay. Reporting. Now this is important. Management accounting's one of the major aim is to give proper timely report to the management, and that is done through reporting. Preparing proper reports in a standardized form at a uniform time interval, so that it helps management do what they want to do the best. All right. Now, I hope we have understood scope of management. Let's look at the functions of management. The first function is plan to forecast. And this is exactly what we have been discussing about. A good planning and forecasting is the first function of management accounting. All right. The next one is modifications of data. We need to understand modification of data does not mean changing data or manipulating data. It simply means presenting data in a manner which can be understood by the other person. Data available with financial accounting or cost accounting might not be very clear with the management side. So management accounting modifies it in a simpler format. Financial analysis and interpretation, yes, a very important function of management accounting. They don't only analyze it, they interpret the information of financial accounting. If you remember earlier, that is exactly what we discussed in cause and effect relationship. Not only profit, understanding the causes of that profit, that's important. It's analysis and interpretation. Then the fourth one is managerial control. Every organization aims at the best level of managerial control, and it is the management accounting which gives enough information to the management, with the help of which they can have a good managerial control over the organizational assets and of course all other activities of the business. Communication. Communicating the correct information at the correct time to the correct people is main function. However, here the correct people are the management. But then timely and accurate information to be communicated is to be done by management accounting, right? Use of non-monetary information. A lot of things which are not actually directly financial in nature, like government policy decisions, or understanding the ethics of the business. These are non-monetary items, but management accounting does use this kind of information for helping the management or the business in making correct or informed decisions. Coordination. We understood earlier, trying to make a relation between various departments. See, if departments have good relation, good understanding, they can work in tandem with each other. And a coordinated effort of various departments will always be beneficial for the business. All right. And the last function of management accounting is strategic decision making. What is strategic decision making? Informed decision is strategic decision making. All right. So I hope we have got this right. Now, the next thing is advantages of management accounting. First advantage of management accounting is management need for information. Management needs information. Management cannot do anything without having proper information. And it's management accounting which provides it. Efficient planning and effective organization. In fact, we just now discussed about planning and forecasting. Correct management accounting information helps business in making a proper planning, which results into better organization. All right. Third is service to customer. See, when an organization is making correct plans, they are able to implement them, they will be saving the cost or improving the quality of the product. And in both these ways, it will be a good service to the customer, right? The fourth point is increase in efficiency. If you remember, we discussed about setting up targets and achieving them. When the target for each employee is set and they are motivated to achieve it, the efficiency of the employees and in return overall organization increases. When the efficiency of the employees increases, obviously the profitability does increase. All right. Now, the next one is industrial relations. Guys, this is the point we have been discussing in different names for a very long time. Right. Good relations between different departments, interdepartmental relations, industrial relations. But industrial relations is a little different. It's not only about departments, it is also about the employee-employer relations. A good or harmonious employee-employer relations leads to a better organization, which management accounting helps. All right. Control or managerial control is something which we have just now discussed in the previous slide. And the last one is contribution to society. See, we need to understand we are giving good service to our customers. We are increasing our profits, by which we are increasing the wealth of all stakeholders of the business. Obviously, when this happens, company pays good amount of tax, and that helps the society to grow. It's a good contribution to the society. All right. So I hope we have all understood advantages of management in detail. Let's move to the next part of this chapter, which is limitations of management accounting. First one, it depends on accounting information. Now, this is a real problem, a real limitation. Management accounting does not have any input or data of its own. It is purely dependent on the information given by financial accounting. Any mistake there, automatically management accounting information is wrong. All right. Next one, subjectivity. As we discussed, it's an art. Management accounting is an art. Subjectivity, a judgment based thing. All right. And whenever there is a judgment, there is always a possibility that that may be wrong. Right. Now, third one, interdependency on disciplines. See, management accounting depends on multiple disciplines, but two main disciplines where it depends is financial accounting and cost accounting, from where it gets data. It is dependent, and this kind of interdependency is not a good thing for any stream of accounting, or in fact any stream of business. All right. The next one, not a substitute to management. Now, we have already discussed a couple of times that management accounting is an aid to decision making. That means it can help management in decision making. But management accounting in itself cannot take decisions. Therefore, it can support, it can help, but it cannot substitute management. All right. Then the fifth one is dependent on level of education. Execution. What happens? At the top level, management makes all big decisions. We will do this, we'll do that, this information. And what happens if the people at middle level or lower level management does not implement it? All the efforts and the hard work put by the management at the top level goes in vain. So the success of management accounting depends on the level of execution by people at lower levels. All right. Looking at point number 6, evolutionary stage, it is comparatively very new. When you talk about financial accounting, it's there from 15th century, then cost accounting since industrial revolution. Comparatively, management accounting is very new, and therefore there is a lot more to come into it. It's not come at its maturity level or at a better level. It's just at the starting stage. All right. So obviously there will be certain hiccups whenever we are trying to use management accounting. Seventh is expensive. Any activity which needs people, which needs time, will also need money, and that is expensive. And therefore, normally you would not find management accounting being used in small scale businesses. It's usually a large scale business which uses management accounting. And then non-quantitative factors. A lot of time. The results of management accounting cannot be measured in terms of money. Like, you can get better customer satisfaction or better employee loyalty by implementing some management accounting decisions, but then they are non-quantitative in nature. So that is the problem. All right. So guys, I think we have all got this. Only a couple of things in this chapter which I have not discussed because I think you people might be knowing it good. One is the difference between the financial accounting and the management accounting, and other is the difference between the cost accounting and management accounting. As it's a very simple part of this chapter, we'll not be discussing about it. I hope everything else is quite clear with you. So thank you for listening to this video, guys. Thank you. Have a great day. Bye-bye.